You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. We are talking to Moshe Wilshinsky, who is a 25-year veteran in the mortgage industry, and he's the owner of Moville Mortgage and Finance. He started in the mortgage industry in Los Angeles in the mid-'80s and got involved in Israel's fledgling mortgage market in the early '90s. In Israel, Moshe has served as a mortgage industry expert for some key government personnel, as well as on the Knesset Finance Committee and Consumer Credit Reporting group that was creating the law for that. Moshe, I'd like to welcome you to the show.
Thank you, Doug.
Listen, you started in the U.S. mortgage industry in 1985 and got involved in the Israeli mortgage market in the early 90s. After all this time, what would you say are the biggest advantages and disadvantages between getting a mortgage in Israel versus the U.S.?
Well, Doug, obviously there's advantages and disadvantages to both. I guess, in Israel, I would say one of the biggest disadvantages is a combination of three different factors. The lack of disclosure as, compared to the U.S. market, the complexity of these mortgages, and knowing what to negotiate. In terms of benefits, today I guess our greatest benefit is the fact that somebody can actually get approved for a mortgage in Israel. In the States, it's a little difficult today. But seriously, I guess one of the best things that exists in this market is the ability to get a mortgage with different segments of terms and rates.
Mm-hmm. I got you. Listen, there's something people talk about, the multifaceted mortgage. Can you elaborate on that and how it's used?
Yeah, as I mentioned, that is one of the things that exists in Israel doesn't exist in the U.S. And what it is basically is very similar to the way you manage an investment portfolio. You have different factors. You balance a portfolio for your client, including risk and income, capital appreciation, maybe even currency risk. We do something very similar, depending on a client's needs. Whatever's appropriate for the client, we'll be able to, within one mortgage, balance different things from currency exposure to anticipated partial repayment.
I know that sometimes the banks will encourage people to take a mortgage in a currency. For example, when I went a few years ago, they said that I should take a mortgage in Japanese yen. And I said, but I'm not buying the property in yen, and I don't earn money in yen. Why would I do that? Isn't that just adding a currency risk?
I believe firmly so, and I tell people, you got a guy, and sometimes we have clients who are sort of between here and the States. In other words, they have a business in the States, whatever. They have some significant steady stream of income from the U.S., and yet they're living here, so they're exposed naturally to two currencies. So in a situation like that, then the currency hedge really is worthwhile. But I agree with you. In your situation, I tell people never get their mortgage confused with trading currencies. If they want to trade currencies, there's a lot of ways to do that, but not in your mortgage.
I got you. Let's talk about another one of the confusing issues that I think comes up, which is when people make aliyah, they often have one concept of a fixed rate mortgage, but in Israel it's not the same. What's the difference?
It's a very good point. It's something from, we remember back in Economics 101, it's the difference of nominal rates and fixed rates. And simply put, in America, somebody goes to a lender and they get quoted a fixed rate, and whatever that interest rate is, that's actually what they're going to pay for the life of the loan. And if they make their full payment, they'll see their principal steadily decrease until it's fully paid off. In Israel, when they get quoted a rate on an index loan, that rate is actually a real interest rate, which means it's the interest above inflation. So it's real for the lender, for the investor, so they know what they're getting. But for the borrower, for all practical purposes, it's adjustable because it's dependent, it's based on that rate plus whatever the inflation factor is. So it could very well be that they'll make their full monthly payments, every month, and after a number of years, they'll discover they owe more now than they owed before. and the interest rate that they paid in nominal terms could be significantly higher than what they were, originally thought they had, or this real interest rate that they see on their mortgage documents.
So can you give an example of what that might look like?
I'll give you one example that's actually relevant here in Israel now, because even though they're not common, you can get non-indexed loans. But for example, somebody gets a 25-year loan, and I'm using rates as examples. These aren't actual rates in the market, but let's say somebody gets a 4% fixed rate in real terms. And that's compared to, let's say, a 6.5% in nominal terms. So they say, wait a minute, why would I want to pay another 2.5%? And we explain to them that 4% that they're paying in real terms, in nominal terms, if inflation is 3% for the year, that means they're paying 7% versus the 6.5% in the nominal terms. And in years from now, one thing we know about the future is that it's uncertain. So if inflation flares up and even ticks up a little bit in this country to 5 or 6%, all of a sudden their 4% mortgage in nominal terms, they're going to be paying 9 or 10%. So that's really where the issue comes up in the interest rates, and the way the loans are calculated, their monthly payment doesn't always cover the total amount. So there's the principal itself is being indexed to this rate. So the principal itself is growing, and that monthly payment isn't fully amortizing that principal until the very end of, until the second half of the loan.
Okay, we are talking to Moshe Wilshinsky, who is a 25-year veteran in the mortgage market, both in the United States and now in Israel. And he's been explaining to us about how there are index-linked loans, which I presume we're really talking in Hebrew. The term would be tzamud lamadad, would be linked to inflation kind of loans. So let's just clarify in the last point you made. Let's say a person borrows $100,000 and has a 4% interest rate on the loan that is connected or linked to inflation. If inflation over the course of the year is 3%, are you explaining that he will then be paying 4% instead of on a $100,000 loan, but rather he'll be paying 4% on a loan of $103,000?
Basically, what he is doing is he's paying 4% above the 3. No, is he paying 4% above the 3% he's paying? So that $100,000 in shekels turns into 103, but his interest rate is going to be 7% in nominal terms.
Okay, fine. Let's talk in shekels. So let's say he borrows 100,000 shekels. At the end of let's say he borrows it on January 1st, and then on December 31st, they calculate that inflation has been 3% over the course of the year. So the principal amount that he will owe will increase by 3,000 shekels, right, by the 3%, and he will pay 7% on that 103,000 shekels?
It is, just to be clear, Doug, the overall cost of his loan will be 7% for the year. That will be a combination of the indexing that's done on the principal and on the interest, so that when he looks at what the total interest that he's paid and the hatzmadah that he's paid, right, that will equal 7% of the loan.
Okay, so again, I just want to be very clear in terms of shekels. He borrows 100,000 shekels.
Right.
At the end of the year, let's just say that he had to make a payment once a year, just for simplicity's sake, which is not how these things really work. But at the end of the year, what would his situation look like?
He will have paid 7,000 shekel for the cost of the loan, and that will be a combination of his hatzmadah and his interest.
And how much will he owe then at the end of? He makes a payment, and then how much will he owe come January 1st next year?
He will not have paid out that full 7%, so a portion of that 7% will be attached to his principal, And basically, what we call negative amortization, he will owe more. In your case, it'll be approximately 103,000 shekel at the end of that first term, at the end of that first year.
I see, because he will have only actually paid the bank 4,000 shekels, which is the 4% nominal.
Right. Basically, what they're doing is they're taking the, let's just, in our example, let's say he has 1,000 shekel a month payment. So they take that 1,000 shekel a month, they apply the madad to that, and then they apply the madad separately to the principal. So the amount that they're applying to the madad, to the payment, that increases his payment by the amount of the madad. And then the amount he's paying to the principal, he's not paying that until he actually pays off the loan.
Wow. Okay. Moshe Wilshinsky, this is a very interesting conversation, and I appreciate the fact that you've taken the time to spell out just on a basic example loan, but obviously many of our listeners are always looking for understanding more, and there are certainly a lot more complexities. In the last few seconds, could you just tell people how they could learn a little bit more about what you're doing?
You know what? People can call us from, we have a U.S. number or an Israeli number, 073-796-2226, or from the U.S. 201-377-3418.
Okay. Moshe Wilshinsky, who is the owner of Moville Mortgage and Finance, thank you very much for your time.
Thank you, Doug.
You've been listening to the Goldstein on Gelt show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt show.